Welcome to the brand called You. The brand we are talking to today is Deepak Shenoy. Deepak is the founder and CEO of Capitalmind. He previously founded two other companies, Agni Software and Money Yoga. He's a pioneer in algo and systematic trading, as well as a very credible, highly rated voice on investments. Welcome to the show, Deepak.
Thanks, Sandeep, and great to be here.
Well, let's kick off. What is Capitalmind? What do you do there?
So I founded Capitalmind roughly 8 years ago now. So it's 2022. And it was 2014 when I founded the company. It was primarily a research-oriented firm around how to help retail investors in India make investments in capital markets, both stocks and bonds, or fixed income markets. Relatively speaking, most research was focused on institutional investors. So a lot of the more complex data-based investment research, where you crunch numbers, you come out with the kind of visualizations that will help you make appropriate investment decisions. All of them were available to institutional investors, perhaps, but not so much to retail. And I was under at least confident fairly that India would move to be a larger market from a retail investor side. And India has always been one. So over a period of time, as our research was consumed by a lot of our subscribers, many of them came to us and said, why don't you actually manage money rather than just tell us what's good and what's not good? So we said, okay, let's apply for a license. We got a license with SEBI that allows, that's the Indian regulator, that allows us to invest customer money into stocks and mutual funds and bonds and so on. And this license is kind of, we started from scratch. We didn't, we kind of innovated in the fact that because I'm a software engineer by qualification, I had to think of everything saying, let's build the software the right way. And we started building a lot of the tech ourselves, built the entire backend tech on our own so that our entire PMS, which is the portfolio management service, is actually something which is powered by a technology that is homegrown, including fund management, including automated trading, including customer facing platforms. So our entire customer applications written by us, and we kind of tweak it in different ways to allow customers to see a lot more data than most other companies in the space might do. And we've built it slowly. Now it's grown to about 1,000 crores, which is about $125 million right now. Small for the US perhaps, but reasonable size for India.
Yeah, fantastic. So that is a combination of research and assets under management in PMS.
Only the assets under management in PMS. So we have another 1,500 crores under an advisory layer where certain family offices ask us to help manage their money, but we don't actually manage it. We only advise on it. So that's about 1,500 crores apart from this. And the research is, of course, just customer based. So we don't know how many assets will run on it. So that's about, that's a different business by itself. We call that Capitalmind Premium.
But it's a subscription model for your research consumption, right?
Yes, the subscription model.
So how is it, tell us a bit about, what kind of people consume this? Because we see obviously different segments in the market. Are these the new age millennials? Are these the experienced investors? What is the mix of people you are focused on?
So in the PMS, we've actually now scaled to a point where we have a lot of all types. So there are the new age investors, the first time entrepreneurs, the first time investors in stock markets, in the sense that they've come from modest beginnings, built their careers over time, built a certain amount of assets, figured out that this is not something that they can manage on their own. And then they want an experienced fund manager to manage it for them. And that's when we come in. There's also people who have a considerable amount of wealth, who've given us a small portion of their wealth to manage because they like the way we manage things, which is a little different from what others do. So that's another set of crowd. There's a very large amount of crowd that is, I don't think we'd call them millennials. Very few people who are probably under 30 years of age but they're the 30 to 60 or 30 to 50 kind of age group, which is when you've just finished paying up for your house. You've got this excess disposable income now, but you don't want to spend it. You want to save it. You want to create wealth in the longer term. That's the profile of most of the customers. But now we've seen, even some millennials, some really, even people who have retired and have wealth, that they want to kind of just grow because they don't need that kind of money anymore. As in their fixed income takes care of all their expenses. So they just want some part of their assets to just grow over the long term. So we've seen all sides of the spectrum. And then, of course, we've, I think a lot more people now are, because we don't use any distributors, we directly sell to our customers. There are people who actually like that form of direct interaction with the fund managers rather than being 2 steps removed. And therefore, getting a very different view of investments, because a distributor typically represents 3 or 4 such investment houses. So,
you don't use any distributor, everything is directly sold.
Everything is directly sold. So we've been
that must be a lot of one-on-one calls by you, huh?
It started off that way, but now the team's quite empowered. So it's kind of fascinating to see. Earlier, I would know every single customer's name. I would have talked to them. Now the growth happens, without having to have me talk to them. And sometimes I find out that someone has invested afterwards, even if they know me. They tell me, no, your team took care of it, So I was like, wow, this is cool. This is pretty interesting. But, I guess growth pangs and growth, surprises come along as well. So
it's institutionalized now. That's great. We've just gone through one of a nicest bull markets where a lot of people came into the market because, it was going up 25-30% year on year. How do you see the market changing? But even now, India is severely underpenetrated in terms of exposure to capital markets, exposure to equities. How do you see that changing and at what pace?
So, Sandeep, if you look at the overall structure of the market, and we've worked together at ST as well, from the time then, that was about 11 years, more than 11 or 12 years ago, to now, a few factors are kind of surprising. So one is in 2009 to 2010, or roughly that time, the volumes you saw in the market are roughly about maybe a little more than half the market volumes you see today in the cash markets. So that's the cash markets haven't even grown as much as GDP. That means buying stocks that you will take into your demat account every day. That market hasn't grown any meaningful way, even though the GDP has grown 4x and so many more investors have come to the market and so on. Sorry. It is largely the futures and options markets that have grown quite tremendously. So if you look at the overall spectrum, it's the derivatives markets that have really, really grown, and the cash markets are relatively small. On the other hand, you've seen a lot more institutional investors. So institutional investments have more than, I think they've gone about 4 times or 4.5 times in the same time. So people have chosen different vehicles, whether it is pension funds or insurance accounts or mutual funds. The separate set of accounts, the investing vehicles have actually changed quite tremendously. So I think that way India is in a very interesting place in the sense of it's changing the financialization. You're moving away from real assets, which is real estate and gold, as a percentage of total saving onto financial assets. Now, this is actually very, very, very raw in the sense that we're probably growing into the financialization that probably the US saw in the 50s or 60s. It's that far behind, but India has always had a traditional love for real estate and gold. So it's going to be very difficult to extricate that away from the investing part of the process. So it's slowly rising, but every percentage point that it rises, it increases the amount of investments in India by a fairly significant number because it's so small. So less than 3% of Indians own stocks at all directly. India's mutual fund penetration is about 15% of GDP. America is 125%. Brazil is like 60%. So India is like 15%. China is also 15, and even the next biggest, I think, developing economy is also. I mean, the next economy that's close to us is just 25%. So they're still significantly higher than us. So in that context, the penetration is low. It's growing. It's also becoming easier and easier because the regulators have actually broken down a lot of the earlier, let us say, inefficiencies in the market. So, for instance, if you invest in a mutual fund today, you could do it off of a mobile phone in a minute. It just takes a quick transfer. You have instant account transfers using UPI. You can use this to instantly invest in a mutual fund in anyone's name, as long as you just have a PAN number, which is your tax account number, and an Aadhaar number, which is equivalent to an SSN in the US. It's just a form of identification and address proof. So just taking these two, even electronically, you could open an account, quickly invest, start a process that not just invest once, it could invest over a period of, say, 5 or 6 months, called a systematic investment plan, SIP. This is the fastest growing part of the Indian investment landscape, by the way, the SIP concept. So many new people are coming in because it stretches the investment over months rather than all at once, that that part of the business is fueling most of whatever fund flows are coming into mutual funds in India. So this has also become easier. PMSs like ours, we have a limitation, a minimum of 5 million rupees or 50 lakh rupees is what you need to even start an account with us. This is fairly large because the average per capita income in India is probably of the order of 120,000 rupees. So it's effectively 50. You need to have a wealth which is 50 times India's per capita income just to open an account with us. So it's it's really large in that perspective. But we are account managers at one level, and there's a bunch of others. There are other kinds of investment vehicles as well. The market's very, very nascent, and the next maybe 5 to 7 years, I expect this market to grow up 3x, grow around 3 times. And even then, it will only be 25% of GDP. So,
and will it be driven by education and demand generation, or will it be driven by selling and distribution power?
This is a very good question. I think selling and distribution power have their place because India still happens to be largely, very well spread out. So the different techniques work for different people. And in the financial business, largely people do require some hand holding, at least initially. But I see a good portion of this growth come from 2 sectors of the market. First, investors who started now and who've probably gone through this journey till now, there will be bear markets and people who get scared and run away, and then new ones that come in. But over time, as they realize how easy it is to get information about investing and are able to make informed decisions without having to go through an advisor. So you could get the information on your own, you could compare returns, you could compare portfolios, you could compare strategies, you could understand how fund managers think directly. Earlier, the distributor carried the message saying the fund manager is thinking like this. Now you go to YouTube and you can see the video of every single fund manager about what they're thinking. Many of them are interacting on podcasts, Twitter spaces, and the like. So you can actually do a one-on-one connect. So the distribution mechanism has become more social media and direct oriented. And no matter who you are, you're going to have to do this. Either you're a fund manager in the largest mutual fund in the country, or you're a small fledgling fund manager like us. I think the direct connect with the customer is not nice to have. It's a must have in tomorrow's world. So I think that part of it will become it will spread education, no doubt, but it'll also say that, listen, I want to be here because I like what this person is saying and doing and thinking and investing. The secondary attribute of all of this is the fact that people will have significantly larger amounts of disposable incomes among the top 5 to 10% of India. And pretty much the top 5 to 10% of India is all of India's economically realizable value. When I say that, I mean the rest of it is great, but they live on such small income and spending patterns that you don't really count them as a big investor today. Some of them will grow, of course. The middle class will keep saving and become upper middle class as we go along. But I still think that 10% will only become 15% to 20% in the next 10 years. So it will, there will be some people will save more, but not necessarily that much more people will come. So, that's how I think of the market. But I see this growth also coming on the back of the relative ease by which you can get your money in and out. So earlier it used to take 5 or 6
reforms that have been done through UPI, through Aadhaar-based investments and digitization of the whole process.
Yeah, exactly. And the one statistic here, Sandeep, is that US people don't keep their money in fixed deposit with banks. They keep their money in money market funds.
Yeah.
In India, money market funds tend to yield more. In fact, government treasuries yield more than any fixed deposit with a bank. In fact, more than what mutual funds get from the money markets also sometimes. But still, people invest in fixed deposits, which are tax hampered because you pay tax as soon as you receive any income, versus money market funds where your tax is only paid when you exit the money, exit the funds. So even though you're tax disadvantaged in a fixed deposit, you prefer to use vehicles like fixed deposits rather than money market funds. So that education, when it comes in, and debt is a market which is 10x the size of equity worldwide. So you can you're going to get a lot more people starting to look at money market funds or debt funds or even direct government securities, for which the RBI has opened a facility for retail to invest directly, much the same as the way you can buy treasury securities from the treasury directly. So you can buy here from the RBI. But I think this part is where, the financialization and the information gap is being filled very, very fast. So in the next 10 years, I expect that part of the market also to grow.
I see. What do you think of algo trading?
Oh, this is, of course, I think we're both on the same side of this. So, I mean, you ran India's first, I think, algo trading hedge fund, which, you continue to run it. And I was, fortunate enough to work for you for a while at that time. I think the concept is obviously very attractive, both high frequency and relatively low frequency algo trading.
You said you execute everything through software. So in some sense, you are using algorithms, at least for execution.
Yes. So we figured that after a while, when we have so many customers that add money or you get dividends that have to be redeployed every day, trying to do anything manually, of course, all the allocations and the trade sheet generation, so whatever we need to trade every day, that's anyway generated by our software. We said, let's take a step forward and splice the orders so that they can be spread over the trading day, hunt for volume whenever there's more volume, find the appropriate price to buy them, so that humans don't have to make those errors and reduce the fat finger errors on, sometimes you might buy when you want to sell. And so we programmed, built algorithms. In fact, this was very recent because it was not easily available earlier to retail investors. But since we weren't a broker, we were using a third-party broker. They didn't provide us the APIs for a while, and then now that we have an API set, and we actually confirmed with SEBI that they have no problem with us doing this. So we now execute on a automated basis. So we call it automated trading and not algorithmic trading, because while the algorithm generates what we need to buy, it's still vetted by a fund manager, who then says, well, this is what needs to be, this is what's the portfolio today. And that portfolio is then, okay, so if this is the portfolio, what do we buy and sell for each customer? Put that into a trade sheet. Before we automated the actual execution of trades, a trader would actually trade these manually, on a screen. Saying, okay,
so you're using algorithms to reduce the manual work, but not as much for decision making yet.
Yes, so we're not directly. So we've experimented with that as well. So I think of course, the idea here is the markets themselves throw in opportunities that you may not be able to catch with the naked eye. And even though you know that this may be a low frequency thing, it may happen once a day, once an hour, but it might happen because of mispricing or opportunistic trading by some other participants who have skewed the values of prices that can be,
Sure.
say, either arbitrage or in certain cases just opportunity. I want to buy a stock, but I don't want to buy it if it is too high. But sometimes prices fall, and sometimes they fall intraday to ranges which we like. So we just kind of figure that out and say, okay, well, this is the
Fill an
this is
order
the
at a
kind of
target price or an expected price of what you
expert.
want.
And
Makes sense.
India doesn't have the depth of the US market, so you don't have all the instruments that you do. But here you do
Sure.
have a bunch of very similar traded instruments, whether it is stocks or futures or options. Now we don't do futures and options, but I think within stocks itself there's enough opportunities. The latest, for instance, is that ETFs that are traded in India. There were opportunities where ETFs would trade as much as 10% away from their net asset value. So we could actually buy ETFs in the market and then redeem them from the asset management company directly, saying that, listen, your prices are way off. We'd like to redeem from you at the NAV. So you make a fairly good spread. Of course, that's come down. It's no longer available. But, even that was available. And that's a easy way to do algorithmic trading if you find these opportunities. And then you can build them out. So I think, the word is vilified in certain cases, saying that, oh my God, our computer's taking away the jobs. Are they going to do the trading themselves? What if something rogue comes over and takes over the world? But I think those are these, Netflix series conversations rather than, real. So if you really want the money, it's going to be very boring. It's going to be just a bunch of numbers that seem to come across, and that's what machines are built for, and machines do best. So maybe we should just train the machines to do it for us.
What about crypto? Is it part of asset allocation on what Capitalmind looks at?
Well, we have a zero capital allocation to crypto, and we can't because India doesn't have the depth. But I personally find it unattractive. Now, I know this is not popular, but the reason I find it unpopular is more from the way it is constructed. I think the philosophical concept that a currency will come in and it will be usable across the landscape with no interference from central banks who've done this all the time, and they will allow that countries will allow an alternate currency in the end to take over the financial world. I think I find that a little difficult. So I think at some point there is going to be an upper limit to growth. And a large amount of this growth is also speculative. So unfortunately, because there's no regulator or anything of that sort, whatever scams we've seen in the real financial world, in stock markets, bond markets in the past, you're seeing those entire set of scams play around. People who pull rugs were earlier.
Deja vu.
Yeah, deja vu. It's just like, oh, what's next? This is what's going to happen next. And so you entice people to invest, and then you see people going in, and then you pull the rug from under them by selling your stuff before theirs. So all of this stuff is happening in the crypto world. So a large part of it seems to be like a little haze. And, good products might, for instance, not even realize that the good part of them is embodied in a part of code that is unintentionally leveraged too much. So you have these products that say, well, if you give me one crypto coin, I'll give you another one, and we'll balance it in an algorithmic way. So automated market making, for instance, I think it's a great concept. I love the concept, but I think there are flaws in the delivery mechanism that currently exists, where you could actually, if you had enough resources, trick the algorithms to selling you some assets at a very, very low price because they're designed to do so. And the algorithm. And so if you drop the price of one asset, the other asset price will also drop correspondingly just to balance. It gives you the ability to buy the second one, and the first one you kind of counter it just because there's something else in the background. So we've seen a lot of currency pairs actually fail this way. In a sense, something that is relatively new comes in, and a startup that kind of says, okay, we'll back this up by a certain level. We saw a bunch of automated market making issues, where the problem was that there was a limit to number of new coins on one side that they could issue. So once somebody figured that out, it was just like, oh, what's it going to take to bring them to that limit? And then after that, just keep pummeling the price down. Suddenly the whole thing goes bust. I forget the name of the coin, but the concepts are fascinating, but it's just human behavior that seems to be embodied in the code right now. It's going to take its time to come to maturity. But overall, I find the promise of it alluring, but I think the actual eventual usage of it will be far less useful.
So promising, but not investable right now.
I don't like it. I like it from a speculative investment point.
Sure.
I think it's a great speculative asset because it moves so fast. You can make some enormous amounts of money that way. But if you try to use it as a currency, or if you try to use it as a store of value at some point, that's where I get very jittery, because I think speculative profits can and should be made, but converted to the currency that you actually spend in.
Sure. Understood. Let's change gears, Deepak. Talk about your personal life. Tell us about your childhood. Where did you grow up? What were the childhood influences that shaped you to become this financial guru that you have become?
Actually, it's very strange because I was probably, okay. So I was born in a village in Karnataka. My mother's from a village, and my father's from another village fairly close by. But my father was a banker, and he had a transferable job that made him stay in one place for about 3 to 4 years at a time. So I spent a lot of my childhood in the north. So I grew up from my 3rd standard to my 10th standard in Delhi, where all South Indians were Madrasis. So I don't know if they still are, but I was always Madrasi because of the nature of the word. And to people who don't know, Madras is a city, or the old name of a city that is in South India, but it's only one city. There are a lot of cities in South India. I come from a very different part.
A lot of states to begin with.
Yeah. So I grew up in Delhi. So a lot of the influences I had, since my father was a banker, I was exposed to understanding a little bit of finance, very little, because I don't think my father would talk too much about it. But as his eyesight started to weaken, he would ask me to read out the prices of stocks that you could find in a newspaper. And that's how I knew there was a stock market whose prices changed. That's pretty much all I knew.
How old were you at that time?
I was probably 11 to 15. That's the each time that I kind of would read this out to him, and he'd be like, okay, that's great. And, I was least interested in the stock market. I couldn't care if markets went up or down. All I knew was they were numbers and they would change. There were lots of numbers in brackets. I could probably tell you what they mean now, but at that time, no idea at all. And after I finished my school and childhood, the only thing that I was good at was math, which is, in India, you had only 2 degrees that you could pursue. You could either become a doctor or an engineer, and everybody else was, oh, this poor fellow couldn't get a doctor or engineering seat somewhere, and therefore he became, a philosophy major or whatever it is. And, now the professions are more respected, where you could be a cricketer, for instance, or a sportsman. It would be a good thing. But at that time, a sportsman was just somebody, he wasn't very good at academics, so he had to take up sports and all that. So because I was good at math, there was naturally a move towards engineering as, a goal that you had to do. So after my 12th standard, and interestingly, when my 12th standard was on, I had no idea about this. There was the big crash of 1992. This was during my 12th
Right after liberalization.
Right after liberalization. And in fact, the markets apparently had crashed 40-50% around that time. This is right around the time I was giving my final exams. And I had no idea this was happening. And later that year, I joined a college, which is again in Karnataka, in the south of India, in the western coast of Karnataka, which was very interesting because it exposed me to computer science. And I was doing my bachelor's in computer science. I learned about computers. I fell in love with the concept of being able to build stuff using code. So we wrote a lot of, I would work nights and do crazy stuff in the night. Of course, not a college is a college. So there was not as much studying as one would expect. But this one of the passions I figured that came out of this was strangely, computer science and actually building applications using code, and a love for public speaking. So I figured that out towards the end of my college years, that I actually like being on stage. I like talking in public settings, but I wasn't too keen. I mean, it wasn't something that I thought of as would be useful in my life at all. But it turns out it has been quite interestingly. So post that, I started my, I was always, so my father's been a career banker, or had been, and he would tell me, and I would, I was always interested in starting my own business. And he would tell me this, is like, don't work for someone for the rest of your life. Try to build something that's yours, and then you can do great things with it. And I think over time, I was also too keen on that. In fact, my father suggested, why don't you not take a job after college and just go start your own thing? And I said, no, Dad, I have no idea how companies work. I don't even know the first thing about business. I knew there was a concept called accounting because we had to study it, but it was so weird that I almost failed in it. So, I was not keen to do things in the finance world at all. So after a couple of years of working for some companies in Bangalore, in the software service, Bangalore, this is the time when there would be signboards. I mean, this is us making a joke about it, saying trespassers will be recruited. Because
Right.
IT companies were hiring people who could even spell the word computer. It was a case where, one IT company would come and say, how many students do you have? We had 350 in any, given year. They say, can we take all of them? And we say, no, you have to So there was one company that took 140 and another company that took 80. So by day 3, you were done. And this was almost unheard of. My college would have day 15 of interviews and stuff like that. But here, we were like the first or second batch to actually get this massive hiring that was happening everywhere. And we all got our little designations of a junior engineer or something, which got into some. So it was all at IT service companies, largely serving the US. So when I started my first job, within 3 months, I was sent to the US to meet a customer for a 3-month period. I had to figure out certain software pieces and so on. That's my first exposure to the US as well. And it was Boston in winter, so I wasn't very impressed with the cold. Having been in India, even the coldest of cold in Delhi does not become equal to the crazy, raving, lunatic kind of cold that you can get in Boston. So, and this was a town about 50 miles off of Boston, so it was not even So it was a really small town. So I was working there. It was a lot of fun actually in the initial days, because you only seen this stuff in the movies, but then when you actually come there, it's just a lot different. It's there are great things, and there are things that you don't think would be true of the US. I mean, I was particularly, for instance, even in the extreme cold, sometimes in India, at least at that time, it's relatively easy to get some form of public transport from one place to the other. The US is almost not built for public transport for the most part.
So driving is big here.
Yeah, driving, and I wasn't driving, so that was the complicated part for me. But interestingly, post that, I started my first company. Sorry, I'm just taking too long.
Yeah, no, I think I wanted to bring you back. So obviously, big influence of your dad. He's the one who prompted you very interestingly, even before you were ready to start your own business. That's fantastic. Tell me, what was the most significant, memorable single advice that you remember you received from someone that changed your view or your path?
Well, I would have to think about this, because I think, I have this unfortunate problem of not remembering too many things or making too many heroes. So it's that Tina Turner thing of, we don't need another hero. And we don't need to know the way home. So it's almost like I've said, okay, you can't have unlimited heroes. So everybody's a hero in some way. Warren Buffett is, and so on. But they're not like the only heroes you have, or the only people you look up to. A lot of people, including you, have inspired me in my journey all the way.
God.
It's been, you've built many successful businesses, and I don't think I would say that I was not inspired by you at all. I drew a lot of inspiration from you as well. But one of the things that a person has said, who's not a person I worked with, and this is relatively benign because it's probably not life-changing for a lot of people. But to me, it's the essence of anyone who is in financial markets and perhaps in life as well. He said, his name is Joy Bhattacharya. He was, I think, the person who was the CEO of Kolkata Knight Riders, which is a cricket IPL team in India. And an old friend, and he told me this: angels can fly because they take themselves lightly. And since then, it's been a life-changing event for me. That the thought process of saying, well, you don't have to take yourself seriously. You can change your mind. You don't have to be right all the time. Because you come
Just
from
1 second.
Sorry.
Unfortunate. I normally turn it off, don't get calls, but yeah, let's keep continuing.
I just turned mine on. So that statement in itself, and there's another thing, and this is not.
But that's an interesting advice for you to remember, because being a financial guru who's advising people, how do you take yourself lightly?
That's the important point, because when you're in interview, I don't know is actually a very good answer. Because it forces you to understand that you don't know enough about something. You can only make conjectures. And most of these conjectures are wrong. And I'll give you an example of how crazy it is. I saw a podcast of David Rubenstein, I think, of Carlyle. And it was on March 29th of this year. And he actually said that, listen, I think Russia is losing this war, and Putin has to make a truce within a month. Otherwise, he's finished. This is a person who runs a $300 billion company. It's not a small one. And the war is still on. It's October. So it is actually that it's not that he said it and that he's wrong. Oh my God, he's wrong. But the point is, you have to take such statements lightly. Even if you make the statements yourself, you can't be like, listen, I said that, so my God, am I wrong? If you can't change on a dime, if you can't turn on a dime, you're not going to be a great investor at some point. And at some point, you're not going to be a great human being either, because you have some principles you got to live with it. Like, murder is evil, and no matter what you do, murder is evil. But you can't have that level of things that are purely opinion otherwise. So you have to be willing to change your mind.
Don't be a fanatic about anything. Huh?
Yeah,
that's good advice.
And if you take yourself too seriously, you'll stop doing things. There was a line in Finding Nemo by, so Marlin is looking for his son Nemo, and he says, I can't find him, I'm distressed and distraught. And Dory, who's another fish, asks him, why are you so distraught? So Marlin says, I promised his mom I won't let anything ever happen to him. So she thinks a bit and she says, well, if you don't let anything happen to him, then how will anything ever happen to him? Which is or good or bad. And that's another statement that kind of sticks with me. I watch a lot of cartoons. I have 2 kids, so I've seen them all and memorized the lines. But this is the thing that tells me you got to be able to experiment. If you take yourself too seriously, you will view failure as a deeply distressing event. But failure is part of everything you do. At best, you'll get 50% of your guesses right. Yeah.
That's a good odds. I'd take that any day. How do you invest your personal savings, Deepak?
So almost all of my money is sitting in the PMS right now, which is I invest
in your own cooking, huh?
Sorry?
Eat your own cooking. Bill Gates once said, you got to eat your own dog food.
Eat your own dog food. That's how you have to do it. But it's not just that. It's just that I don't find it lucrative to spend my time thinking about my investment separately.
Separate.
So I'd rather be part of the same thing. So it's
No,
like,
I think that's very good life principle. You got to have, I mean, that's the ultimate test of your belief in the work you're doing. So that's good. We are on the last two steps here. I'm going to ask you rapid fire questions. So whatever comes to your mind, you got to blurt it out. Who's the best investor ever?
I would say George Soros.
Okay. If you could meet a historical figure for dinner, who would you like to meet and what would you ask them?
Wow.
Historical, dead, or I mean, even alive if they are prominent enough.
Well, that's interesting. I probably he's not a very prominent person. I don't know if this would qualify. Ed
No, that's
Seykota.
fine. Yeah, it's a figure, and I'm interested in hearing why you picked them. So go ahead.
Yeah, so there's a guy named Ed Seykota who is a trend following trader in the US. He's probably one of the most interesting investors in the world, and at least in my book. And he said something once, and he said you always get what you want from markets. And then he's established this into a larger thing, saying sometimes it's not profits is what you want from markets, you want entertainment. You'll get that entertainment. And so that's how it starts. But the philosophy is much wider, right? So I think I'd like to grill him or talk to him about this and say, what made you realize that the emotions that drive the markets are superior to the markets themselves?
Interesting. If you could only watch one movie all day over and over on repeat, what would it be?
Whoa, okay. I have done this with a movie called Sholay, which is
yeah, that's like a generational favorite.
Yes, and I've done it mostly because that was the only movie for which I had a tape at the time. So that was by this thing. But beyond that, there's actually it's a cartoon movie called Up.
Yeah,
it is very strangely inspiring to me, and I have actually watched it on loop a couple of times.
Really?
Not for anything else, but I think something in it says it's never too old to change. It's never too
and never too crazy to visualize anything.
Anything.
I remember the house floating over to the falls in South America. That's
South America. Yeah, that's and pretty interesting statements of some of the statements here are truly profound, but they're a cartoon movie, so you don't take them seriously, right? So
sure.
But I find some of these statements very strangely inspiring. So I don't know if I'd watch a movie on loop all the time. You'd get bored of Up in 3 times.
That's
sure.
Fine. But you have done it.
Yes.
You're an accomplished guy. What is an achievement that may be small, others might not know about it, but you feel very good about it? What is something that you feel really proud of, an achievement, an act?
Well, this is a very strange thing. My only academic achievement in my entire life, and this is probably because I'm talking like literally from the time I was ever giving exams to even now, was my 12th standard academic results. And perhaps that's the only thing that ever made me feel that I was a little different. Now, I got a 2-digit rank in the state. I was in Karnataka state at that time, which was to me also quite surprising. Nobody in my family had even got a 4-digit rank till then. So I would have been happy with a 4-digit rank. But the fact that I did that at the time when there was a tragedy in the family, there was a lot of things happening, and that probably is the small thing that I remember as something I've done that is probably interesting. But I mean, of course, the greater things in life are I built a company.
No, that's good.
All of that stuff is
look, it's you only know the context in which you achieve, and sometimes things which may not appear great to others in your context were really moving. So I appreciate that. Deepak, we could keep talking forever, but the last question I have for you is, what is brand Deepak Shenoy in your own words?
Oh, okay. This is interesting. I did start off trying to build brand Deepak Shenoy. I wanted to build a brand that was the company and the company's capital mind and so on. But it seems to be that people associate people with brands and brands with people. And in the financial world, it's more important because you see the names. They're Merrill Lynch, they're Goldman Sachs, they're all of the names of the founders are in there because they inspire confidence. To me, building that brand meant be honest, be trustworthy, and have integrity, so that when people look back at anything that you've said, and even if what you've said is wrong or wildly inaccurate, it will not be dishonest or lacking integrity or somehow trying to pull a fast one on somebody else. So if you just stick with that, I think over the long term, the results will somehow flow. It may not always work out in your favor, but the fact is you can't go wrong doing this, but you can be very wrong if you try to get short-term gains at the expense of integrity, trust, or honesty.
Okay. So the honest teacher of financial markets, that's Deepak Shenoy, our brand for today. Deepak, always a pleasure to talk to you, my friend.
Thanks, Sandeep. It was great, and I wish you all the best.
Thank you.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.